Okay, so a very warm welcome to today's session, Forex Basics Part 1. Just a quick check, can we all see the welcome slide and clearly hear the audio? If you can, just go ahead and type yes in the chat box, please. Excellent. Brilliant. Also, can I ask how many of us here actively trade? I mean, this can be either a live or demo account. It would also be great if you could pop in your experience levels, as in years in the market. I just want to get an idea of who we've got attending today. Thanks, Gerald. Excellent. Thank you for that, guys. Okay, so let's crack on with it. So this is a presentation which is, it's going to be largely directed to newer traders, though I sincerely welcome all traders of all experience levels. For those interested in a recording of the webinar, FP Markets, as far as I'm aware, send an email to attendees shortly after the presentation concludes. However, the webinar will be available in FP Markets Trading Hub. You can also view the webinars via FP Markets YouTube channel. So before we get the ball rolling, traders are urged to read through the disclaimer on screen. So it basically informs viewers that information presented in this presentation is intended for general advice only, and none of it should be relied upon as personal advice. FP Markets do not take into account your investment objectives, financial situation, or particular needs. Yeah, I think that covers most of it. Okay, so with that out of the way, let me just tell you a little bit about myself and highlight the main topics of focus for this presentation. So my name's Aaron Hill, and on behalf of FP Markets, the plan is to release a series of educational content spanning from beginner to advanced, aimed at primarily helping traders further their understanding. So for me personally, I've been involved in the financial markets since about 2010. I was lucky enough to begin under the guidance of two consistently successful traders. One has now retired, though the other is still currently active. So in terms of qualifications, I passed CMT levels 1 and 2 in 2019 and 2020, and recently enrolled on the final level early this year, and all being well, plan to take the exam in December. The CMT is a tough program and really opened my eyes to technical analysis. At least it was tough for me anyway. But I can wholly recommend it to anyone interested in technical analysis and the financial markets. I also recently received the CFTE qualification from the International Federation of Technical Analysts in 2020. So as for trading, I like to keep things simple in my approach. This is how I was always taught, using price action, Fibonacci, the relative strength index. This is an indicator, and chart psychology. I'm also a strong supporter of back and forward testing systems. So as without statistics, trading consistently, especially with live funds, is difficult. So in fact, I don't know of any professional trader that I've met who does not test their systems before unleashing them on the live market. As a quick addition, I'm sure most have heard that trading is a never-ending journey, and for me that has proven to be true. I've yet to meet a trader that knows or understands everything, so I'm a great advocate for furthering education in the markets, particularly on the psychological front of trading, as trading is, it's essentially you against yourself, not you against the market or you against the broker. It's always you against you. So yeah, I would also thoroughly recommend watching the recent webinar series presented by Gary Burton, also on behalf of FP Markets. So personally, I consider him one of the masters of price action and technical analysis. You can find these under the webinars tab on FP Markets. Also, Gary's analysis, along with my own analysis, is provided in the FP Markets Traders Hub. So be sure to check that out. Okay, so now as for the topics for the presentation, 3 core elements will be looked at, including a basic introduction to the Forex market. So for this presentation, I will try to keep things as simple as possible here, you know, as this is directed at newer traders. I will also look at currency pairs and their framework. For this, we'll largely focus on the most actively traded currency pair, the euro-dollar. Finally, we'll also go over some important terminology to set you on the right foot, and you know, and then I'll try to get around to any questions that may arise. However, I'm happy to try and answer any related questions to the content as and when they may arise. If I'm unable to get to all questions today, please feel free to go ahead and send them to support@FP Markets, and the team will reply as soon as possible. I'm just getting a few questions here. Has this started, Wayne? Yeah, I believe it has. It has started, mate. Yeah. Just going to double check just to make sure. Yeah, we're online, Wayne. So yeah, if I'm unable to get to any questions today, yeah, as I said, please go ahead and feel free to send them at support@fpmarkets.com. So what I'll do is I'll actually I'll copy and paste the link into the chat box for you guys. Just give me a second. I think that'll be easier. Okay, so it should come up there. Okay. Right, okay. So, okay, before we get into the nuts and bolts of this presentation, I thought it would be good to highlight the difference between an analyst and a trader. Okay, you can't hear anything. Sorry about this, guys. You can't hear anything here. I'm not really sure. Guys, can you all hear my audio? Just type in yes. Oh, you can. Our sound is fine. Brilliant. Okay, Kia, that might be something on your side, I'm afraid. Okay. Okay. Okay, so yeah, before we get into the nuts and bolts of this presentation, I thought, you know, it would be it's good to highlight the differences between an analyst and a trader, as to become successfully consistent as a trader working solo, you will need to essentially become both. At its core, there are 2 types of analyst, a technical analyst and a fundamental analyst. Technical analyst is research largely conducted through charts. This is why technical analysts are often referred to. This is why technical analysts are often referred to as chartists. It's essentially the study of price movements. You know, in other words, you know, trend studies, volume studies, and technical indicators. So on the other side of the field, we have fundamental analysis. These are the guys and girls who analyze economic, social, and political forces. This, for FX trading, also includes macroeconomic indicators released daily, which can be found on, you know, all economic calendars. In fact, FP Markets have their very own calendar under the Resources tab on the FP Markets website. So now, as far as for as long as I can remember, there has been debate as to which method or form of analysis generates the better return. Some employ one method, others tend to incorporate a mixture of the 2. So for me, I focus largely on the technical side of things because that's how I was taught. But I'm always aware of news, particularly tier 1 news releases. Those you know, that are usually marked red on the calendar, and these can really cause large price swings. So really then, what is the difference between a trader and a market analyst? You know, the answer for me, in my experience, is literally one thing for me. It's trading psychology. A trader is swarmed with a barrage of emotions, while the analyst is generally remains objective. It's when you have real money on the line that is when the emotions really do hit home. So to keep things simple here, for trading psychology, it's an emotional component of a trader's decision. It's a trader's mindset. So effectively, this is the greed and fear part of trading. You know, unfortunately, many traders overlook this subject and believe market analysis is all that's needed. So it's great if I'm able to help highlight the importance of trading psychology for some newer traders today. In fact, a book I can absolutely recommend is Trading in the Zone by the late Mark Douglas. It's an absolutely awesome book. I must have read this book at least 3 times already. He does a great job in simplifying things. Also, just quickly, another point worth highlighting is that trading psychology can also help answer the question as to why some market analysts don't trade, but oddly can highlight key trading zones. You know, I think the crux of it is that some of us just cannot accept losing trades. I'm sure you guys have had this. A losing trade hurts. It does hurt. It does get easier with time, but it does hurt. And I've not found a way of controlling that yet, the pain. So I guess without going into more detail, the key takeaway is that a market analyst and a trader are just 2 completely different animals entirely, just 2 completely different animals. So for me personally, I trade my own live account alongside market analysis, though, you know, guys, it really took me years of banging my head against the wall until I actually listened to my mentors about trading psychology. I really thought it was it was only the analysis that mattered. Find the key trading areas and things will be fine, but it's not. It really isn't. So now, of course, it's not to say a trading system and risk management is not important, because it really is as well. Yeah, it's all important, but trading psychology should be number 1, especially for newer traders, in my opinion. Though for me, I must point out I trade long term, so not so much long term charts as in the monthly, weekly, and daily, but long term in my trading goals. So it's important to have trading goals, in my opinion. So I trade literally for a retirement plan, if you will. I don't focus on weekly profit and loss, or even, you know, monthly profit and loss. You know, there are some weeks I do not even take a trade because, you know, I'm quite a picky so-and-so with the with the charts. So I tend to actually watch the year-on-year movement of my account. This may not be something other traders find appealing, as you know, we all have different goals in life, right? Some will want to quit their 9 to 5 and trade full time. I know I did when I first started. That was the plan. While others look to trading as a part-time venture. You know, this is the beautiful thing about trading. It's incredibly flexible. So, okay, you know, apologies. I did not mean to go on for so long about that. I'm just, you know, incredibly passionate about trading and the financial markets, and, you know, I want to get newer traders on, shall we say, as I said, the right foot in terms of trading psychology. And, you know, I think it's really important that we highlight its significance. Okay, with that in mind, let's spin things over to the FX market. Okay, so just quickly, before I do, are there any questions so far? I'm getting a few about the link. Can I have the link that doesn't use the app? Steve, I'm not sure what that is. My support team will get to you on that. That link doesn't open, and I'm not. You mean the link for the support at fpmarkets.com, Steve? Is that what you're talking about? I'll just quickly type that out for you guys. There we go, guys. I've just retyped it in there for you. Okay, so yeah, so for most of us here, so we're going to move things onto the FX market now. So for most of us here, even for newer traders, we've likely come across websites stating the foreign exchange market, or or more commonly referred to as the Forex market, is the largest financial market in the world. They were not wrong. According to the 2019 triennial survey of turnover in OTC FX markets, trading reached an eye-popping $6.6 trillion per day in April 2019. This was up from, I believe, $5.1 trillion per day 3 years earlier. So this document is freely available on Google. Actually, let me just try and ping this across to you in the chat, guys, because it's definitely a worthwhile read and can really open your eyes in regards to, the framework surrounding the FX market. Let me just try and copy this across. It's a PDF file, guys, so let's see, that should come across. Excellent. Okay. Right. So with FX being such a large market, it's also important to recognize what the most actively traded currencies are. So as you can see from the slide, the US dollar remains the world's most dominant currency, on one side of 88% of all trades in April 2019. It's an absolute beast of a currency. Europe's single currency commands a 32% share of foreign exchange turnover, while, as you can see, the Japanese yen is at nearly 17%, the British pound at nearly 13%, and the Aussie dollar at 7%. Just 1 second, guys. I'm getting a question. What's the title of the book you recommended? Yeah, so the title of that book I recommended for trading psychology is called Trading in the Zone by the late Mark Douglas. It's widely available on Amazon. Yeah, so it's definitely recommended, guys. Back onto the slide. So the aforementioned currencies also form part of major currency pairs traded in the FX market on a daily basis. And this brings us on to the next presentation topic, currency pairs and their organization. The Forex market, as you're probably aware, is made up of currencies such as the ones we've looked at so far in this presentation. The euro, Japanese yen, and pound, for example. However, currencies in the FX market are quoted in pairs. So one currency is quoted against another currency, hence the term currency pairs. So in effect, the amount you would pay in one currency for a unit of another currency. So on the slide, as you can see, we have the euro against the US dollar. This is the format you'll see on your trading platforms such as MT4, MT5, and also the RS platform. So according to the quoting convention, the first currency, the euro in this case, is referred to as the base currency. Now, the base currency is what traders buy and sell when the pair is traded. We must also remember that the base currency also always represents one unit of currency. The second currency in a currency pair is called a counter currency, or sometimes the quote or secondary currency. The counter currency is what the base currency is valued in. So if you buy euro dollar and price advances, gains are not represented in the base currency euros, but in US dollar, the quote currency. This is something that it took me a while to actually understand, so I hope this is coming across loud and clear, guys. If it's not, please just go ahead and type any questions you have, and I'll get to them. So as an example, if you buy, say, 100,000 euros on euro dollar, this is a standard lot in terms of position sizing, but we won't go into that today. It's just to highlight it. So you've effectively bought 100,000 euros and sold the equivalent amount in US dollar. So if the euro dollar exchange rate is a nice round, say $1.20, this means you've actually sold 120,000 US dollars to obtain 100,000 euros. So it really isn't that complicated when you think about it, because this is really no different to when we exchange cash at the airport before we go on our holiday. For me, for example, if I were traveling to Europe, I would sell GBP, as I'm from the UK, for euros. So in effect, I would be buying the euro pound currency pair. So if I wanted 1,000 euros and the euro pound exchange rate was, say, 80 pence, this would cost me 800 pounds sterling. Again, so I've effectively sold the pound for euros. So now we have now we know a little bit about the framework of a currency pair. I thought it would be a good idea to take a look at how currency pairs are actually classified. So in general, traders classify pairs into either major, minor, and exotics. So the majors are typically the most traded currency pairs, paired with the US dollar. Although some traders may refer to any currency pair featuring the US dollar as a major. The majors are the most actively traded currency pairs, which means they are the most liquid. So for those unsure of what liquidity means in FX, it simply refers to I'm trying to think of a way to put this, the ability of a currency pair to be traded. So high liquidity in FX refers to a currency pair that can be bought and sold in significant sizes without large variances in its price level being seen. In general, it also means that the spread, i.e. the difference between the bid and ask levels, will be tighter, therefore making it cheaper to trade. So look, guys, don't worry if this is going over your head, especially for our newer traders. This is something I plan to touch on in the next webinar. So yeah, common major currency pairs are euro dollar, pound dollar, dollar yen, and Aussie dollar. So guys, can I just ask, I take it most of us here trade or have traded major currency pairs. Please feel free to let me know in the of any other majors you guys trade in the chat box. It'd be interesting to see. No, okay. Okay, I'll just continue. Okay, so in general, so in terms of the minors, okay, Stephen, thanks. Failed on the majors. Let me just try and expand this box so I can see the full question. Just give me a second, guys. There we go. Failed on the majors and minor. Oh dear. Sorry to hear that, Steve. You mainly use US dollar CAD, Shane? Oh, okay, excellent. Do you look at oil as well, Shane, as a correlation? Okay. So, where was I? So, okay, in terms of minors, the minor currency pairs, they are usually currency pairs that do not include the US dollar. They're slightly less popular pairs and often experience more wild price swings due to less liquidity in the market. So, common minor currency pairs, as you can see on the slide, are euro yen, Aussie New Zealand dollar, and euro pound. So finally, we have exotic currency pairs. These are the currency pairs that are rarely traded and tend to operate with thin liquidity. An example of exotic currency pairs are, CAD, Canadian dollar, Singaporean dollar, and the pound against the Thai baht. So guys, please let me know if I'm speaking too fast here, or I'm bombarding you with too much information. So as I said at the beginning of this presentation, this is recorded and can be watched again. if you feel you have missed something. So failing that, feel free to ping across any questions. The team here are only too happy to help. Okay, so moving on to trading terminology. So for newer traders present, the financial markets, it can seem like a foreign language. In fact, when I first began, it's exactly how I felt. I had to search each term. I had to search each term individually to ensure I understood it correctly. So I'm sure you'll understand it is far beyond the scope of this presentation to cover the entire trading dictionary. Though I'm going to highlight a handful of must-know terms to get you started, though some of these names have already been discussed in this presentation, and therefore, it will serve well as a good reminder. So kicking things off with the term currency pair. As already highlighted in this webinar, a currency pair is formed of two currencies paired against each other. Active currency pairs are referred to as major currency pairs. So we also have, okay, so before I go ahead, does any of our newer attendees want to take a stab at telling us what the base and quote currencies refer to in the chat box real quick? It'd be good if you, be good to see that. So just a quick one, just a quick sentence would be great. Steve, yeah, you won't need to download it. You can also, these webinars will be widely available, and as I said at the beginning, you'll receive an email following this, following the conclusion of this webinar. So you'll be able to see it there. And failing that, you can also look on the FP Markets website under the webinars tab. They'll be all there. Excellent, Stephen. Thank you. Thanks, Derek. Yeah, brilliant. The base is the first currency, and the quote currency is the second currency. So the base currency is what traders buy and sell when a pair is traded and represent. So yeah, you guys know it. I can see it. Excellent. Yeah, this is really important information. Actually, I mean, for me, it took a while to understand. So yeah, just to go over it. So yeah, the first currency in a currency pair is the base currency. The base currency is what traders buy and sell. When a pair is traded and represents one unit of currency, always represents one unit of currency. The second currency listed in a currency pair is called either the counter currency, quote currency, or secondary currency. A counter currency is what the base currency is valued in. So okay, a new term here, a new term for us here, pips. So look, guys, if you've been trading even a couple of months, I'm pretty sure you know what this means. If you want to ping that into the chat box, I'll be interested to know what your opinions are on pips, what they mean to us as traders. Just a quick sentence would be fantastic. Because we've gone through this webinar really fast. Actually, I've really gone through it quick. Thanks, Stephen. Yeah, Shane, excellent. Thanks, guys. That's brilliant. So yeah, pips. This is not something we've looked at in the presentation, though. A pip is an acronym for percentage in points and represents the smallest price movement any exchange rate can make. So let me just add something here. There's also a term called pipettes. I'm pretty sure most of you guys may have heard of this. Pipettes are smaller than a pip. They're the units that make up a pip. You'll often see this when a currency pair is priced to 5 decimal points, I believe. So a pip, it measures the amount of change in the exchange rate for a currency pair. It's also worth noting that most currency pairs go out to 4 decimal places, but there are some exceptions, like Japanese yen pairs that trade out to 2 decimal places. Pips are also the means by which profits and losses are quantified. But yeah, as I said, guys, we'll touch on this in the next presentation. So long or short, guys, if you've been in the market even a little while, you're going to know what this means, I'm pretty sure. So a long position, so long and short basically refers to buying and selling. It's almost slang for FX traders. So a long position in a currency pair means to buy the base currency and sell the counter currency. A short position in a currency pair is the mirror opposite, i.e. To sell the base currency and buy the counter currency. Now, I was speaking to a few newer traders recently, and this was quite difficult for them to understand why we buy a base currency and sell a counter currency. This is something I will touch on in the next webinar as well, just to ensure that we all understand this, as this should be the beginning stages of our webinar series, and I want you to all understand, the basics before we move on. So essentially, what we have here is a long position, meaning you've bought a currency pair, and a short position, which means you've sold a currency pair. Okay, another one for you guys to remember is bid and ask price. Now, so the very basics of this is essentially price levels in the market that shows willing buyers and sellers. Do you guys all understand what bid and ask price is? Have you seen it on the MT4 and MT5? You can actually, yeah. If you could just ping that in there, yes or no. Like, you guys are, yeah, cool, excellent. Thanks, Simon. Excellent, thanks, Gerald. Oh, brilliant. Okay, so the bid price represents the selling price for us traders, and the ask price represents the price at which traders can buy at. This is often confused, among newer traders, and it's certainly something that you must understand, because there's often a lot of confusion with when you're taking profit or your stop losses. So the market watch window on your MT5 platforms display active bid and ask quotes. Also, usually the bid price is displayed as a horizontal line on the chart area. In the common tab under the properties window, if I remember correctly, you can also click the show ask line, which will then display both the bid and ask line together. So when you place a sell order, your trade will be executed at the bid price and the buy order at the ask price. So the difference. So guys, do you know what we call the difference between the bid and ask? There's a term for that. Do you guys know what that is? Yeah, excellent. Thanks, Simon. Brilliant. Yeah. So the difference between bid and ask prices is the bid and ask spread. So this is something I'm sure we'll look at in future presentations, as I know it's a bit of a mouthful for newer traders. Let me okay, leverage and margin. Now, I'm sure you've all heard of leverage and margin, even newer traders. This is something that largely pulls a lot of traders into FX because of the higher leverage that's offered. But a lot of people do misunderstand leverage, what it means in the derivatives market. So margin and leverage are, closely related themes, and it's quite an in-depth subject. But leverage, in essence, without going into too much detail on the differences between derivatives and equities, so leverage is borrowed money. Trading with leverage allows a trader to open a position with greater exposure. A leverage ratio of, say, 30:1 means that a trader can control a trade worth 30 times their initial investment. So if a trader has, say, $5,000 available to open a trade, they can effectively control a position with a total value of $150,000. So if the leverage ratio is 30:1, if the leverage ratio is 30:1, in Forex trading, leverage is related to the margin rate, which tells a trader what percentage of the total trade value is required to enter a trade. Yeah, I'm sorry, that's a bit of a mouthful. So yeah, for those interested in looking up additional FX terminology, please feel free to check out FP Markets Trading Glossary, which is found under their. Thanks, Robert. That's very nice of you. So for those here interested in looking up, as I said, the FX terminology, please feel free to check out FP Markets Trading Glossary, which is found under their Resources tab on the website. Actually, just give me a second and I'll send over a link to the chat box for you guys, because it's a very detailed glossary and it's well worth taking a look. All right, okay. So, right, are there any questions related to the content or any questions you have in general? I'm happy to answer them now in this section. Sometimes it's a little bit difficult to answer during the actual presentation. If not, we can look at a couple of charts. If you have any charts in mind, I can ping up TradingView. Are you presenting? Gerald, I'm not sure. Are you presenting some simple work, e.g., buy and sell? Gerald, I'm not sure I understand. I'm sorry. That's the New Zealand dollar Swiss. Is there anything in particular you want to look at on the New Zealand Swiss? Yes, I think I'm pronouncing your name right. David Pan, can you really make a living trading Forex? Now, if you type that into Google, you see how many results you'll get. Look, I can only tell you from my experience. I know of traders that are doing it. My first mentor, an absolutely awesome guy from the UK, he proved to me he was making money, and that's what kept me going for so long. Without that, I would have probably given up, because you hear so much on the internet about people making money, but they never prove it, right? That's a big thing for me. That was a big thing. So my mentor actually proved it to me. And there's one term he actually said to me that stuck with me. And he told me that trading should be as easy as making a good cup of tea. Now, he's English, so it should make sense, but it really frustrated me, as you can imagine, at the start of my journey. I'm really struggling to understand the charts. I didn't focus anything on psychology, and I'm wondering how he does this. And he showed me there was a number of times he took a loss, and I'm thinking, wow, that would really affect me, but it didn't. He just moved on, and he was very calm about it. So yeah, the answer to that is, David, yes, you can, but don't underestimate the time it takes. This is not an easy career. You're going to have ups and downs. It's definitely something you need to be in for the long haul. These weekend courses or anything like that. Yeah, it's gonna increase your knowledge, but it's not going to make you a trader overnight. That I can assure you. Because I've done practically every course you can. I've been to seminars. I've gone abroad to seminars, and and I've been disappointed with quite a few of them, to be honest, with promises of this and that. And so, yeah, David, I believe you truly can make a living. It's not easy. You see, there's a lot of people on YouTube now, I've noticed, selling courses and stuff like that. It's getting pretty annoying, actually, because it's not that easy. It really isn't. But it's like everything in life, right? If you dedicate time, and you almost become. I've almost become obsessed with it, to be honest. I'm obsessed with price charts and the psychology behind it, to actually see some consistent results. But as I said, I don't focus on my weekly or monthly results. So that really helped me, because at first my initial aim was to get rid of my 9 to 5, trade at home, and that's it. But it didn't work out for me. I was too focused on that. So I expand with advice from my mentor. He advised me to look at the longer term picture, in which I did, and it helped so much. Really did, especially with accepting trading losses. Yeah, but this guy, one of my mentors, just unbelievably incredible. I mean, his psychology is just I've not seen anything like it. Yeah, so the answer to that, David, sorry for the long-winded answer, but yeah, you most definitely can. It just takes a lot of time. So Stephen would love to see some basic signals for jumping in on a trade if there is time. I'm not sure if there's going to be time for that. It depends on what pair you want me to look at, Stephen. If you can ping across a couple of pairs. I've got, I'm not sure if you've seen the FP markets analysis. You'll see a few on there. It's not signals per se. It's just more analysis of where price is likely to go. I've just seen actually the euro's broken the 120 line, which actually lines up with a crucial daily demand. So yeah, Simon, I use Iris Trader. Is MT4 better? No, I believe Iris is pretty much up there. It's a really good platform. I've only got a demo account on Iris Trader though. I use MT4, but I use for my drawings for my chart analysis, TradingView. Fantastic drawing tools for that. Using MT4, where would you go long and short, and how would you do it step by step? Gerald, this will be something for another webinar. Actually, we have a webinar coming up with one of our other analysts who's going to show you in depth on the MT4. That's, I think, very soon. Did you mention chat box? I can't find it, Steve. I'm not sure how you would see it your side, my friend. I can see it. Guys, can you see the chat box? Just to check that it's not just Steve. Damn it, I can't see without. Yeah, okay. Yeah, Steve, I'm not sure there, mate. Yeah, did you mention chat box? I can't see. Okay, from your experience, do you see it as a better way trading Forex and stocks to make a living? So, David, that's another good question. I'm also looking at longer term stocks as well, especially for dividend investing. As you know, as I've told you guys already, I'm looking for the long term. So I believe dividend investing is very, very good. There's tons of people on YouTube doing that, and they're showing. And the key thing is they're showing proof, which I like. Yeah, so I believe stocks for long term. But if you can master trading the FX market, that doesn't mean you need to know everything. It really doesn't. It just means you need to master one trading system, master yourself, and understand risk management, and you can make a living. But it just all depends what your trading goals are, David. Okay, any of the majors, but if no time, it's all good. It's my painful stumbling block. Sorry, Stephen, I'm just reading out your message here. And always seem to get it wrong at the point, too late or up and down. So, Stephen, how long have you been trading? What's your levels of? All right, I'll just try and answer. 12 months on and off. Yeah, 12 months on and off. Yeah, see, I've been trading for like nearly 11 years now. And my first year, I can remember, Stephen, I actually went to my mentor and I had, like, I'll be honest with you, I had £10,000 in I can't remember the account, what it was, but I had 10,000 and I was up £500 UK. And I was really proud of myself. And I can't remember what system I was using because I was actually trading live money before I even knew what the hell, what was going on, you know. And he basically berated me and made me feel like, what are you doing? And so you need it. It takes time, Stephen. You know, I know we all want to make money. That's why most of us want to trade Forex. We want to make money. We want to make better our lives, which is fantastic. But it takes time. It really does. 12 months on and off. When you say on and off, do you mean it's when you feel like it, or it's part-time after work, or you look at the charts for an hour? So honestly, I would really focus on trading psychology because that really changed my mindset. A loss can really, really hurt us, can't it? I mean, 2 losses, try 3 consecutive losses. And this is what that book that I recommended really goes into detail about, trading in the zone. Please do read that. I have no affiliation to the company or anything like that, but it's one of the best books I've ever read. It really opened my eyes to how a loss really is nothing in terms of in a bigger picture. So if you take, say, 100 trades a year, 1 loss is absolutely nothing. You can lose 60% of the time, you know, and still make a tidy profit at the end of the year. This is something that it's the probabilities. 1 second, guys. I'll type the name of the book again in the webinar, in the chat box. So trading in the zone. So yeah, as I said, this is by the late Mark Douglas. Please do spend some time reading this. Yeah, Stephen, I've just seen your part-time and when there is money to lose. Oh, yeah. I would probably recommend hitting the demo account first. Demo accounts are there to, you know, although the demo account doesn't really focus too much on the psychological side of trading, which is incredibly important, it can help you with your trading strategy and formulating one. So Stephen, I would recommend the demo account and reading the Trading in the Zone, and read it a few times as well, because I've learned new things every time I've read it. Okay, what is the TradingView software? So this is a software, Gerald. This is a software we use for our analysis on FP markets. Just ping in tradingview.com and you'll see it's a major platform. They offer free accounts as well, so you don't have to pay. Yeah, so you don't have to pay at all. It's all free, and you got reasonable access to a number of pairs on there. I see chat for your announcement, but not for the responses to your question. Okay, I'm not sure what that. Okay, guys. So, are there any other questions? I think I've got to all of them actually, nearly all of them. If there are some I missed, please do copy and paste them in the chat box, and I'll get to them. But I think we've covered everything. Okay. So, yeah, I'm not. Okay, excellent. So yeah, if there's no other questions, I'll wrap it up here. So, but however, on Tuesday at 7 p.m. GMT, we have another analyst presenting an MT4 crash course where they'll look at things. 1 second. Can you comment on your approach to Fibbo and RSI? So with the Fibonacci's, there are 3 main components to that for me. There's the retracement, there's the extensions, and there's the projections. If you go on a lot of the websites, it's really quite confusing how you set them out. But is this something you guys would be interested in learning about the Fibonacci? Because I use that extensively. If it is, please send this into support, and we'll get to that. Okay, excellent. Yeah, that's something we can do for sure. This is something I use in the analysis quite a lot as well. So please do check that out. Only what you find that works. Well, Gerald, the thing have you guys ever heard of Fibonacci clusters? This was something that really opened my eyes to why Fibonacci is important. Now, Fibonacci on its own, I didn't really find much use in that personally. But if you have a Fibonacci cluster, which is really it's where, yeah, Shane, it can be, but it's like everything though, isn't it? It's if you know, it's simple if you know. But so Fibonacci clusters are fantastic in my opinion. They really do, especially when they converge with structure. When I say structure, I mean support and resistance, supply and demand. But yeah, the Fibonacci cluster is basically when you have multiple Fibonacci levels converging in the same specific price area. So this can be a combination of Fibonacci retracements, Fibonacci projections, or extensions. As I said, though, it can be excellent when they converge with support and resistance. You know, guys, we're going to really touch on everything during this webinar series: support and resistance, trend lines, Fibonacci, and this will all be taught in a correct manner, because there's a few. There's not a few. There's a lot of information out there that's incorrect with drawing Fibonacci or drawing trend lines. So we're really going to focus on that. And as I said at the beginning of this webinar, please do check out Gary's webinars series, Gary Burton's. for FP markets. It's awesome. It really was. It's a 6-part series, I believe, but it's definitely something you should check out. That's under the webinars tab at FP markets. So with the RSI, Gerald, I usually look at divergences. I absolutely love divergences. They're fantastic in my opinion. But again, it's only a confirmation tool for me, the RSI. So I would look at divergences that converge with, demand or a trendline support, and I also look at the chart psychology. So when I say chart psychology, I mean, so if we break a higher high, there are going to be breakout buyers going full steam ahead, usually breakout buyers. So we know there's going to be stops above there. You have to really think about where the stops are. So there's going to be stops around the round numbers, right? The psychological numbers. Look, I know I'm going into a lot of detail here, and I'm sorry if I'm going off on a tangent here. I'm not meaning to. It's just I'm trying to get some things out for you. So I mean, look, as I said, if you want to learn, if there's anything specific, please go ahead and just ping this across to support at FP Markets, and they'll get this to me, and we'll draw something up for you guys. So yeah, the RSI is mainly divergence for me. You can use the overbought and oversold signals, but they can be quite unreliable, especially in trending markets where you can remain overbought or oversold for considerable time, and you can lose. You can have multiple losses before you see any type of winning trade. Okay, guys. Right. So as I said, we have another analyst presenting an MT4 crash course where they'll look at, no problem, Gerald, where they'll look at things such as creating a demo account and logging in. So also next Thursday, I believe at 9 AM GMT, the 9th of Feb, I'll be back with part 2 of Forex Basics, where I plan to look at, I'll go into some chart structure there, pips and spread. We'll also be deep diving into factors behind trading success. Now, this is something I'm really passionate about. We all want to be successful in trading, right? There's quite a lot of negativity about Forex trading, but I know for a fact people make money at this, so hence why I've stayed the course. Yeah, 11 years is quite a long time. I understand that, but it took me around 8 to 9 years before I started finding consistency. I know this is a crazy number, and you're probably all thinking if you're only a year into it, 8 years is a long time. But I decided I knew better than my mentors and decided not to take on trading psychology. Hence why it took me so long. But then there's other traders I know that it's taken 3 years, and they're making money consistently. So it can be done. So if there are any specific topics you would like the team here to talk about, please be sure to send in your suggestions at support@fpmarkets.com. So also do make sure to register for the FP Markets Telegram channel to get instant updates. The sign up tab can be found at the lower left part of the FP Markets website. Likewise, feel free to check out the FP Markets Trading Hub, packed with educational articles and analysis. Okay, on that note, if there's no more questions, thank you all so much for taking the time out of your day to attend this presentation. I really hope you took something away from it. No problem, guys. Thank you. Have a great day, and I'll see you all next week. Thank you very much.